Debt is bad. That's what most of us think. But is it really? A lot of millionaires and billionaires in America actually embrace debt and use it to grow their wealth. A shocker, right? This is Capital Finance. For today's video, we will talk about different ways of using debt to earn money in today's world. Before we start, click the like button and comment below what you think. Leverage. Leverage is an ability that can make you wealthy in a flash. Consider the following scenario. You purchase a phone for $50,000, take it to the market, and sell it for $60,000. Congratulations! You have just made a $10,000 profit, which is not much. What if you borrow $90,000 from the bank and then add $10,000? That's $100,000, right? You purchase 100 phones from your supplier for $100,000 and then sell them for $110,000 on the market. It's not over yet. You must repay the $90,000 in borrowed funds plus an additional $10,000 in interest charges to the bank. Now you have $100,000 in your bank account. There are $90,000 in profit after deducting your own $10,000. Without money, this is the only way to make money. You and the bank both profited from the transaction. The financial crisis that occurred in 2008 was a direct result of a formula like this being taken to the extreme and not controlled by the government and practiced by everyone on Wall Street. Remember when the housing market was in free fall? And then they wiped out the entire economy? Leverage was a key component of investment banks' profit-maximizing strategy, ultimately boomeranged. Banks gave mortgages to people with poor credit scores and no money for monthly payments, resulting in an increase in defaults. Investors had a nightmare when these homeowners went into debt. As property prices grew for the previous 40 years while suddenly plummeting, the 2008 financial crisis is a subject for another video, so we will not dive into the specifics, but it is still a crucial tool for accumulating wealth. Of course, it's hazardous and you may lose everything, but if you know what you're doing, you could earn a fortune in a matter of days. Mortgage. Mark Zuckerberg's house, just a few miles from Facebook's headquarters, was funded with a 30-year mortgage in 2012. He was almost 30 years old and the world's 40th richest individual with a net worth of $15.6 billion at the time of the event. To put it another way, why go into debt when you have hundreds of billions at your disposal? A dozen $6 million residences would be accessible for him to acquire with no problem. What's the point of a mortgage? A lengthy and intricate response might be summarized like this: free money. Why would anyone offer you free money when you're already a millionaire? Interest rates have everything to do with it. An inflation rate of 3 to 4.5% in the United States means that money borrowed at a lower interest rate is free money. According to the terms of his mortgage, Zuckerberg's rate is a little over 1.5%. But this is an adjustable rate, which means that it might go up for many reasons. Mortgage rates are currently below the rate of inflation, which is terrible for the bank. The ability to perform basic mathematical calculations does not need to be a genius. For example, let's assume you borrow $2 million at a 1.5% interest rate. There is an average interest rate of 2.2% on the savings account. If you put the $2 million in another bank, you'll get $44,000 a year. But the bank that loaned you the money would only receive $20,000 a month. Imagine doing it with $100 million or $1 billion. Borrowing money at no cost is a waste of time when you might be spending it on something more beneficial. A 3% or a 4% difference may not seem significant when dealing with tiny sums of money, but the difference might add up to the hundreds of thousands or even millions of dollars when dealing with enormous numbers. $1 million home is within reach for any successful businessman. You'll be better off investing your money in your business in the long run, which may earn you 15, 25, or even 35% profits rather than in a house. Tossing your money into an index fund may be far more beneficial even if you are too lazy to discover a better method to invest it. Even more so if you were talking 25 or 35 years or more. An index fund's average annual return is 10% in the past. The percentage you save by not taking out a mortgage and instead investing in an index fund will be yours to keep. Is there a better way to spend my time? When he has been given a 1.5% mortgage rate, Zuckerberg makes little financial sense to pay cash for the residence, but he isn't the only one capable of such a feat of ingenuity. Elon Musk, for example, is a good example. Most of his wealth comes from Tesla and SpaceX, so may have to sell some of his assets to afford a $50 million property. However, he may take advantage of free money and keep his monthly payment within his means. For 5 residences in California, he took out a $60 million mortgage, which he pays back each month with a cost of $170,000. That's not only the behavior of billionaires. Kanye West and Kim Kardashian, for example, are relatively wealthy and do it as well. They finance the purchase of their $60 million home with a mortgage. They paid 30% of the purchase price and borrowed the rest. There is now a monthly payment of $119,000 due from the couple. The average home in the United States is worth $200,700. To optimize his profit, he doesn't keep $53 million in a mansion. Instead, he invests it in a wide range of businesses, and he is on his path to being a billionaire. The more money you have, the more opportunities you have to earn more. Let's face it, not everyone is eligible for such a cheap interest rate on a mortgage. It's around 4.5% across the country. At that rate, buying a property isn't worth it, regardless of your ability to pay cash for it. But hold for a second. Let's be clear about something. Why do the wealthy pay less in taxes than everyone else? Billionaires can sleep soundly at night since no one is concerned about defaulting on their loans. And if something occurs, they can quickly sell off a portion of their firm to pay off their mortgage. This is in stark contrast to the situation of the average employee, who may become ill and be unable to work or may even be fired. Second, making on-time payments on your mortgage helps you create and maintain a good credit score, making it more straightforward for you to borrow money from banks in the future. Put another way, you're creating a relationship of mutual respect and confidence with the banks. However, this might also be the case. Mortgage interest rates are so low because banks want to build good relationships with wealthy individuals so that when their businesses require a bank loan, the wealthy individuals will turn to them rather than their competitors. A win-win situation exists here. Although these cheap mortgage rates are for an indefinite period, they are subject to change. Even if it doesn't make economic sense for them, they'll be able to pay off their mortgages quickly if they need to. However, most people view debt as bad because we frequently borrow money for frivolous purposes only to find ourselves having to pay back much more than we originally borrowed. After graduating from college, you understand how much of a burden your student loans are. And as soon as you figure out how long it will take to pay off that debt, you begin to believe that owing money is wrong. For one thing, it's not defaultable. Even a tiny error might have severe effects when it comes to debt. Playing around with debt isn't simple. Indeed, we've accrued so much debt that many people cannot pay an expected $1,000 expense because of the obligations imposed by our monthly commitments. That, however, is the defining characteristic of bad debt as opposed to good. There are times when debt may be a blessing in disguise and when it can be a curse if you don't know how to use it properly. I really hope you liked and benefited from this video. Please give this video a thumbs up and consider subscribing and pressing the bell button next to it if you want to see more videos like this one. This will make sure you don't miss any of the upcoming videos. Moreover, thanks for tuning in and see you in the next video.